There's no better time than the new year to make a fresh start. A ton of you are wanting to buy homes, a lot of you being first-time home buyers. So the housing market has been all over the place, but I don't want you to be scared. I'm gonna equip you in this video with tips, tools, and insider secrets on how you can start preparing now if you want to buy in 2022. And it's not as hard as you think. If you're wanting to get into that new home, kind of scared, not sure what to do, where to start, keep watching. Hey honeybees, welcome back to my channel, or if you're new, my name is Ciara and I do videos on finance and lifestyle. I'm a full-time mortgage loan officer and YouTuber, and I have helped hundreds of people to buy homes and to build wealth. So I take everything I know and I share it with you in hopes you will build wealth also. Number one, you need to go see a mortgage lender now. You may not want to buy until a year from now. You may not want to buy until 6 months from now. But the critical mistake that a lot of people make is jumping into it head first without any kind of preparation. So in order to get an idea of where you stand, I always encourage people start with a mortgage lender. Now, the first thing you want to do when you visit your mortgage lender, and if you do need tips on how to pick a mortgage lender and you're unsure of the difference between banks and brokers and navigating that, I do have a video that should help you on that, which I will link above and below. But once you see the mortgage lender, the very first thing that you need to do is get pre-qualified. Not to be confused with a pre-approval. A pre-qualification is simply a verbal approval based on information that you give the lender before pulling any credit. It just allows us to know if you're ready to apply or if there's anything you need to work on, if you are ready to apply or when you are gonna apply, approximately what price range you'll get approved in. This is gonna be gold, and this is gonna start your roadmap and your journey to preparing for your house. Once you've gotten pre-qualified, you're gonna wanna get an action plan from your lender that covers both your credit goals and needs as well as your mortgage goals and needs. You want someone that can give you a comprehensive action plan. Now, when it comes to credit, as mortgage lenders, we do pull all three of your bureaus. We do what's called a tri-merge credit pull, and it basically means we just pull all three of your credit bureaus to get 3 credit scores. Your qualifying score is actually going to be your middle score. So not your highest score or your lowest score, but your score that's in the middle. You want to be very aware of what your scores are, but most importantly, what your middle score is, because this is going to be the score the mortgage lender uses to qualify you and get you approved. It's also going to determine a lot of factors in your loan. Once you know this middle score, you have that ingrained in your brain. No matter how high your score is, you can always go higher. Know what your middle score is and make sure that you're keeping track of that throughout your preparation process. You can use an app like Credit Sesame to do this. I get asked all the time about different apps and what's useful and what's not useful. I definitely do think the Credit Sesame app is really useful for just looking at trends of your credit and keeping track of where your score is going. Even if it doesn't match up with exactly what the lender has, you'll still be able to track your trends or how your score evolves over time. And you want to be able to just know in which direction your credit is going so you can always be aware. I recommend it because you will get your free credit score, but you'll also get personalized tips and recommendations to help you improve your score. You can also get credit monitoring alerts and theft protection. And you guys know I'm all about the numbers. So when I did my research and looked into it, and what I found was that 20% of Credit Sesame members actually improved their score over 50 points in the first 6 months of using the app. And one cool feature that I really like is they have this feature. It's a free digital debit account called Sesame Cash, and it actually rewards you when you improve your score, and it rewards you with cash. That is pretty cool. As you are improving your score and tracking that through the app, you can also get cash back, which you can put towards your down payment or a savings account or just money that you're going to save in general for your home purchase. If you get pre-qualified or you go see your mortgage lender and it turns out you have a bit of work to do in your credit and you're really needing to boost your score, Credit Sesame has a feature. This is probably my favorite feature they have. It's a credit building feature that can help you establish and grow your credit score. It gives you the credit building benefits of a credit card, but with a debit. And you can also get credit for your on-time rental payments. Just in case you guys didn't know, if you are a renter and you pay your rent in full on time every month, that does not get put on your credit. Now, if you go delinquent, it will get put on your credit, but you don't get the positive impact to your credit score that on-time payments or on-time rental payments give you. So with this feature, your rental payments actually can help improve your score. And there's no credit check, no fees, no interest. And with this feature, you'll get $10 for every 10 points that you improve your score in the first 30 days, along with free ATM withdrawals, early payday, and then of course the credit building feature. So definitely sign up for Credit Sesame. Go ahead and claim your free Sesame Cash account today. The link will be below. Now, like I said, it's not just your credit that you need to pay attention to, but also your overall mortgage goals. So you want to be really in tune with where you're starting from with your credit, track it through the app, but you also need to know what your overall mortgage application goals are. So for example, you want to know what your DTI is, or your debt to income ratio. This is super important when it comes to your loan application and getting approved for a mortgage, because it's going to determine not only if you get approved, but how much you can get approved for. So when you check in with your lender, know your DTI, and once you know your DTI, you can pinpoint ways to lower it so you have an optimal chance when you are applying for your mortgage. When the mortgage lender looks at your DTI, they're only considering your monthly expenses. You'll want to reduce your monthly expenses as much as possible. And these monthly expenses are not every single expense you have, but just the ones that show on your credit. I repeat, just the ones that show on your credit. If it does not show on your credit, then it does not necessarily get counted into the DTI. So just focus on what shows on your credit. If you don't know what trade lines or lines of credit you have on your credit, make sure that you're checking in with your mortgage lender to find these things out. You can also use the Credit Sesame app. It will show you what things are on your credit, what accounts are on your credit, and then you can pinpoint these and ways to either lower or eliminate the monthly expenses. You'll also want to find out approximately how much your down payment and your closing costs are going to be, so you have a target range of knowing how much to save. You obviously want to save as much as possible, but it's going to be really helpful if you have a target range, so then that way you can budget accordingly, work that saving into your budget. If you are kind of stuck on how to save for down payment, how to save for closing costs, what are closing costs, I do have a video explaining closing costs literally line by line. And I also have a video about how you can save for a house, as well as other videos on how to save money in general. So I will link those below and above, but you definitely want to have an idea of how much you need to save. Okay. So number one tip, just to summarize, is to see your mortgage broker, mortgage lender, your loan officer before you do anything else. This is the number one step, most crucial step, because this is going to help you create a roadmap for your plan to buy. Starting with a mortgage lender is crucial because it's going to map out your entire plan and your roadmap for how you're going to improve credit, as well as other things like your DTI and other factors that go into your loan application to make you the best possible loan applicant. Okay, number two, you want to start preparing your documents. I would start preparing these in advance because you don't want to get to the application part of the process and then you are slowed down because you can't find a document or you don't have one. I've had situations where people don't have their W-2s and they can't get it from a past employer because the employer shut down or is no longer reachable. They've had to order them from the IRS, and the IRS takes a while to get things to you. They have to be mailed. That is really frustrating when you're just trying to apply and get approved. You're already, on edge waiting for your results, but having to wait an extra week or 2 weeks in the middle of your application process is stressful. So avoid that by prepping your documents early. If you need more in-depth guidance on what documents you need, then I do have a video up on that, and I can link that above and below. But in general, you want to make sure that you have your most recent 30 days of pay stubs, and obviously that's your most recent 30 days when you actually apply. So make sure you're holding on to those pay stubs, whether physically or digitally. Make sure you're keeping them clean so that everything is visible, or if it's digital, make sure you're keeping it in a safe place to where you could just pull it out when it's time to apply. You also want to make sure you have your most recent 2 years W-2s. If you're applying in 2022, you'll need your 2020 and 2021 W-2s. So that's your most recent 2 years W-2s from all jobs. People get this confused. A W-2 is not the same as a tax return. So if your lender does not specifically ask for a tax return, do not give a tax return. Give them an actual W-2. The W-2 is what's sent by your employer at the beginning of every year so you can file your taxes, and it has your yearly income on it. More likely than not, if you're a W-2 employee, you'll just need those 2 W-2s and don't worry about the tax returns. A situation you will need the tax returns is if you receive any kind of 1099 income or you're self-employed. Then you will need your most recent 2 years tax returns, all pages, all schedules. If you get income that is not in the form of a traditional pay stub, more than likely you will have to use your tax returns. The last part of that is your bank statements. When you apply, you want to have your most recent 2 full bank statements. Not a transaction history, not a screenshot of your bank account, a full statement, all pages, even if blank. This is another thing people mix up. Make sure that you're keeping track of your bank statements. Make sure that you're keeping them organized and clean. Again, if you're doing physical, just make sure they're legible when you go to scan them in, or if digital, just make sure you can get to them. When it comes to bank statements, I often get the question, what are you looking for? The main thing as a lender that I'm looking at when I look at your bank statements is large cash deposits. The reason is because we have to source these, or we have to, in the underwriting and loan process, we have to explain where that money is coming from. So you can't just deposit thousands and thousands and thousands of dollars worth of cash and there's no way to trace it. It has to be documentable. So the first thing I'm looking for is if there are any large deposits, and if there are large deposits, I want to make sure that you have documentation for them and it makes sense. If you do not have documentation for large cash deposits, it's subtracted from the total amount of money that you show in your bank account. Not physically, but theoretically. For easy math, let's say you have $10,000 in your account, $5,000 is from cash. You don't have any way to document this. You kept it in your mattress and you just decided to deposit it because you're buying a house. Because there's no way to source this, the underwriter is actually going to see you as only having $5,000 in your bank account, because $5,000 of it could not be sourced. This is because there are anti-money laundering laws in place now to keep people from laundering money through the purchase and sale of real estate. What's considered a large deposit is anything that is 1% or more of the sales price of the property you're buying. So for easy math, if you're buying a house and it's $100,000, you want to have no cash deposits that are $1,000 or more that you cannot document. So definitely try to avoid large deposits altogether is what I tell my clients. But if you have to make large deposits, make sure you have documentation for them. Also, another thing to consider is who has access to your bank account. So one thing that we look at as lenders, and I'm looking at, is the name. That's why we need a full statement, because we need to see your name attached to your address, and we need to see that it's your bank account. If you have a joint bank account with someone else, you'll have to get what's called a bank access letter. And it's just a letter stating that you actually have 100% full and free access to the bank account and the money that's in there. They want to make sure that somebody else doesn't have full control of the bank account that would keep you from getting the money that you need for your home purchase. So keep this in mind and make sure that the other joint account owner knows when it's time for you to buy a house. They'll likely have to sign a document, probably a bank access letter. Okay, and when it comes to the bank accounts, another thing to consider is if you are getting a gift from a family member. So when you go to buy a house, you can get monetary gifts to go towards your down payment. And unfortunately, it's not as simple as your mom giving you, say, that $5,000 in cash and you putting it in the bank. It's not that simple. We actually have to document gifts in a very specific way. The main thing that you want to establish before you start the application process or the loan process is that the person who is gifting you the money is comfortable with sharing their bank statement as well, because we have to have a copy of their full bank statement showing the money in their account and showing it coming out of their account. Then we have to document that the money goes into your account and clears. I can't tell you how many times I have had somebody's home buying process come to a very scary halt or slow pace because there is a family member gifting a buyer money and they don't want anyone to see their bank statement. I'm sorry to tell you, but if this is the case, you can't use that money. So make sure in advance while you're preparing for this home buying process that you make sure your donor is comfortable with the lender seeing their full bank statement. Now, in addition to those basic documents, which most of you will need in order to get approved, there may be other documentation that you need for your specific situation. If you receive child support, if you want to count that child support income in your income and on your application, you'll need to submit a court order signed by the judge in order for us to use that income. I can't tell you how many times people put their child support on the application to use, but they don't have access to the court order. Maybe they had it and they lost it, or they never got a copy, or I've even seen ones where it's not signed by the judge and then they have to go back and get it signed. There's all sorts of nightmare stories I could tell you, so make sure you're prepared in advance. Have that court order signed by the judge, all pages nice and neat and ready to go if you want to count your child support income. Also, your license. Your license is going to be necessary for the process as well. Make sure that your license isn't out of date. It would suck to be doing your application and then we see it's out of date and then we have to stop because you have to go get a new license. Getting a new license sometimes can be annoying anyway, so just make sure that your license isn't expiring around the time that you want to apply. If you've gotten any major life change like a divorce, make sure you have your divorce decree and your court documents. Let's say you recently graduated from school or graduate school, college, whatever. Make sure that you have your transcripts to show that you were a student. If you've had a foreclosure, you will have to supply those documents that you got from your foreclosure. You'll actually need the cash sale. So make sure you keep all your foreclosure documents and have those handy. Let's say you paid something off recently. Make sure you have the documentation to show you paid something off. Bankruptcy. So if you've gone through a bankruptcy, definitely make sure you can show that you've made on-time payments for the past year and have that documented, as well as all of your bankruptcy documentation. Make sure you have these things in place. This is not a finite list, but it's most of the common things that people need in terms of documentation that I could think of to give you guys. Again, seeing your mortgage lender first, they will be able to guide you on exactly what documentation you need. That's why it's so important to visit them first, but this gives you sort of a heads up and an idea of the documentation you'll need so you can start getting it now. Okay, number 3 tip for preparing now if you want to buy in 2022 is to take action, or don't take action. You want to make sure that you know and understand what actions you should and should not take when you are preparing to buy a home. So you really want to know what the do's and don'ts are. Again, your lender should be able to lay these out plain for you, but I think it's really helpful if you understand these before even meeting with them and you can start implementing these now. So in terms of what you shouldn't do, I'll give you some examples. Again, not a finite list. Some things that you should not do: run your credit a ton. It's because you're going to get multiple inquiries on your credit. It affects your score. Also, when you go to buy a house and your lender looks at your credit report and looks at your inquiries, you are going to be required to explain each of them. So if you have a bunch of inquiries, not only is that going to be taxing on your lender, it's also going to be taxing on you to try to remember what all those are, but also it affects your score. So try not to get your credit pulled while you're preparing, and for sure not while you're actually in the home buying process. Don't make large cash deposits. I talked about that earlier, so that's another no-no. Try to stay away from those altogether if you can. Also, don't lose your job if at all possible. Try to make sure that you are maintaining consistent income and employment. This is one of the most important things you can do, is just to maintain consistency. A big part of getting approved for a home loan is being able to show you have consistency from the last 2 years. That's really, really one of the big keys in getting approved, is having that consistency. So try not to be changing your jobs a lot or losing your job or going through a pay loss. Now, if you have to switch employers or you have to get a new job, then obviously you have to do what you have to do. But in general, try not to do anything that would alter your income or your pay or your job status. You'll also definitely want to consult your lender for this, because they'll be able to give you a full finite list of things that you should not do when you're preparing and in the home buying process. Now for what you should do. Do file your taxes and do this in a way that's going to be beneficial for you as a home loan applicant. This is super crucial for my self-employed borrowers. If you are self-employed, your income is your net income, not your gross income. So when you go to visit your mortgage lender, make sure that you are able to show enough income to buy the house that you want, or to buy in the price range you want. If you know ahead of time your income isn't really adding up, you can prepare to file your taxes and maybe not take as many write-offs, or there's things your CPA can advise you on, or your lender. But definitely, if you're self-employed, do make sure to consult your lender before filing your taxes. Also, do have payment plans set up for any outstanding collections or loans or anything that is outstanding that may not have a payment plan. If you have some collections on your credit, it's not the end of the world. You can still get approved for a house, but depending on how much the collection is and the type of collection, underwriting may want to see a payment plan. Make sure that you have a payment plan in place for those things that your lender recommends, which may be things such as a collection or student loans. They may recommend that you set up your student loans with a certain type of payment plan. So while you're preparing, this is the time to put those payment plans into place. Make sure you do that and hold on to all your documents. Also, and this is a big one, make sure to remove disputes on anything that's $1,000 or more. And again, I would consult your lender before actually doing this, but a lot of times people will apply with disputes on their credit on things that are over $1,000, and in order to get approved, I have to have them to remove the disputes, and we have to re-pull credit, and it's just an entire process, because sometimes the credit bureaus don't actually remove the dispute when they say they're going to. So there's been times when someone called the bureaus or the creditor and asked for the dispute to be removed, which should happen in about 24 to 72 hours typically. They'll confirm, the creditor or the bureau will confirm that the disputes have been removed. When I go to pull credit, the disputes are still on there. Make sure that while you're prepping, you do this ahead of time. Go through your credit, use your Credit Sesame app, or talk to your lender. Find out if there's anything that needs to be taken out of dispute before applying, and do this as early as possible. And I say this because removing a dispute can actually lower your credit. That is another issue I see people run into. They'll have to remove a dispute in the middle of the application process, and then it lowers their credit to a point where they're not even able to get approved, or they're approved for much less because their credit score drops. So make sure you do this in advance and definitely consult your lender before you do so. And last but not least, do save, and save some more. Save more than you think you need. Or let's say you go to your mortgage lender, they give you a target range of what to save. I would save at the top of that range and save more if you can. With the market, a lot of buyers aren't always getting seller concessions or getting their closing costs paid by the seller, which is something that typically happens in a real estate transaction as a bargaining chip between the seller and the buyer. With the way the market is competitive right now, you may not get seller concessions, so you may end up having to cover all of your down payment and closing costs, which can add up. So make sure that you save, and save some more. You really can't save too much money. There's no such thing in my book. The more you save, the better off you will be. Also, because if a lender sees that you have what we call reserves, or just money that you have saved, depending on how much money you have saved, in addition to what would be required for your home purchase, let's say you have extra money saved on top of that. Insider lender secret, that is actually considered an application strengthener. It can be the difference between getting approved and not approved. If you can save above and beyond what you actually need, that actually strengthens your application, and you'll have some extra money for furniture or things you want to buy for your house. These are just some tips that I give you guys as a mortgage lender. I do approvals every day, all day, and these are the things that are most common and things that will help you to prepare for your home buying process. If you did learn something or found any of this helpful, do me a huge favor and thumbs up the video. Make sure you're subscribed so you can be a part of the Honeybee fam. Click the bell button for notifications of when I upload. I do have lots of good content coming for 2022, so make sure that you have that clicked. Don't forget to check out Credit Sesame. I have it linked below. You can sign up for Credit Sesame and get your free Sesame Cash account and take advantage of all those features that they offer. I think it's a great feature, a great service, and it's free, so why not? Check it out down below. Thank you guys so much for watching. I love you to the bank and back, and I will see you in my next video.